Well, it's time for our business bulletin now, and we're starting with news here in France, where the country's data protection agency has issued fines to Google and Amazon over how they tracked users of their French websites. Together, the two companies will have to pay over 130 million euros and make changes to their platforms. For more, let's speak to our business editor, Stephen Carroll. Hi, Stephen. Now, what exactly did Google and Amazon do wrong?
This is all to do with advertising cookies, the digital trace that websites can leave on your computer after you visited them. And the issue here was that Amazon.fr and Google.fr were found to be placing advertising cookies on users' computers without informing them or seeking their consent. And that's against French data protection rules. Now, the CNIL, the French data privacy watchdog, said that both of these websites have now changed their practices since September of this year. They're no longer automatically placing these cookies, but that they are not sufficiently informing users about the content of these traces that they're leaving on their browsers. So, as a result, the CNIL has fined Google 100 million euros and Amazon 35 million euros over this. They've given the companies 3 months to make sure that they are compliant with European data protection rules. If not, they'll face further fines. Google, for its part, has said that the French rules were unclear and constantly evolving, while Amazon said that it was continually updating its data protection practices to be in line with French rules.
OK, now turning to another story, Airbnb is launching on the stock market today, and expectations are sky high despite the pandemic, which I presume severely affected their activity.
It did, and that's why it's perhaps quite surprising that Airbnb is going in with a price higher than it had previously expected for its shares. It's going to start trading at $68 a share. That's more than the company had previously signaled it would start trading for. It's seeking to raise $3.7 billion in this stock market launch on the Nasdaq on Wall Street. It will value the company at 47 billion euros. Now, Airbnb, like many other companies, particularly in the travel industry, were affected by the pandemic. They had seen their losses in the first 9 months of this year of almost 700 million euros, revenues down by a third, but there was a return to profit in the 3 months to the end of September. So that's with people, according to Airbnb, who were looking to either holiday locally or people looking to have havens outside of cities during the pandemic to go somewhere remote work, and that's helped to revive some of Airbnb's business, although there are warnings that the lockdowns that have been imposed towards the end of this year could hurt the company's earnings in the last 3 months of 2020. Now, in the documents that it submitted to regulators, Airbnb says it's proven through the pandemic to be an adaptable business. Airbnb will be hoping to have as successful a stock market debut as its Silicon Valley cousin. The meal delivery service DoorDash started trading on the stock market yesterday. At the end of its first day, its shares were up by over 85%. Airbnb, I'm sure, will be hoping to see something similar when shares start trading on New York in a couple of hours' time.
Indeed. Well, returning to Europe now, the European Central Bank is set to announce its latest policy decision. And what can we be expecting from them?
We are expecting more help for the Eurozone economy from the European Central Bank. Another €500 billion is expected to be added to its bond-buying stimulus programme to try and support workers and businesses during this crisis in the Eurozone. Christine Lagarde recently had said that this would be a meeting that there was, in her words, little doubt that the governors of the ECB would be recalibrating their support for the European economy. This is the ECB's pandemic bond buying programme, which was announced earlier this year. €1.35 trillion already in that programme. They're talking about adding another $500 billion, and the idea would be to make it continually cheaper for companies and for governments to be able to borrow on the market so that they can fund the other support measures they're putting out there for the Eurozone economy. This at a time when, of course, the recent lockdowns again will have affected growth in the last 3 months of this year, and the prospects for 2021 aren't particularly good either. We're expecting that decision from the European Central Bank in about 20 minutes' time, and after that we'll be hearing from Christine Lagarde later. Interesting to see if she says anything about the strength of the euro, which has been gaining in recent months.
Now, turning to the markets next, we've seen a lot of twists and turns in the Brexit saga. Is that having much of an impact on the financial markets?
It is on the currency markets. We've seen the pound slump in trading today as we had, of course, no great developments out of the dinner between Boris Johnson and Ursula von der Leyen, pushing back the deadline till Sunday, and now the European Commission publishing their no-deal plans. The pound down around 1% against the dollar and the euro. It's trading for €1.09, $1.32, almost 33 cents just a couple of minutes ago. And it is usually on the currency markets that we see worries about Brexit played out. At least that's the pattern that we've been following over the past number of years. So we're getting an idea there that markets and investors are certainly worried about what's going to happen in the next couple of days in regards to Brexit. On the stock markets, though, European shares are trading up. Lots of factors playing into that as well. Of course, the vaccine for coronavirus, increasing coronavirus cases, lots for investors to chew on. But for the moment, London, Paris and Frankfurt all trading up today.
Thank you very much, Stephen, for that update. We're taking a short break now, but do join us back on France 24, where we'll have more news in just a moment.